Hi everyone, my name is Michelle Dong and I'm currently attending Branham High School as a junior, and today I'll be presenting my investment recommendation on Johnson & Johnson, which has a ticket symbol of J&J. As of April 2nd, 2025, the stock is currently trading at $154.79, and I'll be issuing a sell recommendation with a target price of $125 per share, which reflects a 90% downside. So Johnson & Johnson is a pretty well-run company, but right now the stock price doesn't really reflect the real risk the company's facing, and this is especially due to the ongoing litigation and legal problems that the business is facing right now. So Johnson & Johnson is a global healthcare leader with operations spanning pharmaceuticals, medical devices, and previously consumer health, which was changed and spun into Kevin New in 2023. They currently employ more than 130,000 employees worldwide and have generated over $94 billion in revenue last year, making their company one of the most trusted names in healthcare. Their overall portfolio includes blockbuster drugs like Stellaria and Darzalex, as well as household essentials like Tylenol and Band-Aid. Johnson & Johnson products help support over 50 million procedures annually, which showcase their impact and huge depth in the healthcare delivery. Johnson & Johnson, they operate in a $12 trillion global healthcare industry. They compete in the high-margin pharmaceutical markets, innovative medtech solutions, and until recently, consumer health. Johnson & Johnson has built a wide channel through decades of building trust with their customers, regulatory strength, and nearly $14 billion annually in development and research. That being said, Cavendish spin-off has reduced their diversification, making them more reliant on the drug pipeline and device portfolio, and making the company more vulnerable to concentration risks and competitive pressures. So I'm recommending a sell due to three main concerns. First, the company faces a lot of unresolved legal liabilities, including tens of thousands of lawsuits related to talking opioids. Second, there's a growing reputational damage tied to how Johnson & Johnson is managing their liabilities, such as the rejected $8.9 billion settlement attempt. Finally, despite these risks, the company is trading at a valuation that suggests that there is little to no risk being priced in. So basically, investors are paying a premium for a company that is headed into a more uncertain territory. So my discounted cash flow model uses a projected free cash flow of $16.6 billion for the year of 2025 and an 8% weighted average cost of capital and a 2% terminal growth rate. So this method will help calculate the present value of Johnson & Johnson future cash flows to assess what the company is truly worth today based on their expected ability to generate profit. This results in an enterprise value of approximately $262.9 billion or around $132 per share. After applying a 10% discount for the litigation and reputational overhang, I arrive at a final price target of $125. I also ran a sum of the parts analysis, assigning $288 billion to pharma, $88 billion to medtech, and $24 billion to the consumer health spinoff. Net of debt and adjustments, this model supports a fair value in the $125 range. Financially, Johnson & Johnson is pretty solid. It has posted a 26% operating margin, a 22.3% rate of equity, and over $22 billion in free cash flow in 2024. Earnings per share saw a 133% rebound in 2022 following the pandemic disruption, and the company has averaged a 5 to 6% revenue compound annual growth rate over the past decade. So the balance sheet is pretty strong and the company continues to deliver shareholder returns. But again, the stock is trading as though there's no headwinds ahead, and I don't believe that's the case. So here's the reality: the risks are real and imminent. Legal liabilities could further escalate and there's no clear resolution in sight. The brand is under a lot of pressure, and their past legal maneuvers have drawn a lot of ethical examinations. There's also a pipeline risk. Their few key drugs generate a significant portion of earnings, and as these patents are soon to expire, they are increasing the pressure. Global currency swings and rising development costs further complicate their outlook. So Johnson & Johnson is seen as a safe stock, but their image is being overall tested. From an ESG perspective, Johnson & Johnson does a lot right. It's committed to a net zero emissions by 2045 and its board over 50% diverse, including 3 women, 3 African American members, and 1 Latino member. They donate hundreds of millions annually and engage deeply in community health. But legal issues tied to product safety and transparency undermine its ESG reputation, especially in the social pillar. So the governance framework is strong, but trust must be rebuilt. So artificial intelligence could be a long-term positive for Johnson& Johnson. The company is leveraging AI in drug discovery, robotic-assisted surgeries, and clinical trial acceleration. However, compared to their other peers like Moderna or Roche, Johnson& Johnson's integration of artificial intelligence has been a lot slower. The risk is that it lags behind other technological transformation, though it does have the capability and capital to catch up. So for now, artificial intelligence remains a neutral factor with a long-time upside potential if it's prioritized. So in closing, Johnson& Johnson remains a highly respected business, but their stock does not reflect the risk that lies beneath the surface. So between a lot of unresolved lawsuits, high valuation multiples, and shifting strategic focus, I believe the downside outweighs the upside of this price. My target is $125 per share, and that's why I'm recommending a sell. Thank you guys for your time.